Okay, so this is what we got for today. This is the economic report. All right, so we're looking at the pound today at 4:30. In about 7 minutes, there's going to be an economic release, two high impact, and then we have one medium impact. So we have a lot of things going on at 4:30 a.m. Dollar looks like it wants to run to 95.95 to 96 big figure. That gives us a continuation on pound to close in this void, which it didn't do yesterday. It left a little bit of that in there still. Small liquidity pool right below these lows in here around that 131.30 level. And ultimately, if we get some expansion, we could see a washout on the stops down at 130.60 to 130.60. I'm sorry, 130.50 to 130.60 on the downside. Looking for bearishness on cable. Fiber's still in a rut. Can't come out of its range. That still bodes well for bullish euro pound. So we have some more liquidity pool resting above this high in here. 85.20, so we got 85.25 to 85.30 liquidity pool. And then we have another one with these equal highs as well in the form of 85.35 to 85.40. It's expansion, we get 85.50. US CAD. It still looks like it wants to go a little bit higher as well. We have old highs back here. If we get a run today, it's going to want to challenge that. 32.53. So another 100 pips or so for upside on dollar CAD. But the focus is this morning primarily just for cable. So we're going to quickly outline where our liquidity pools are. So far, we had protraction on the upside. We've had an unwillingness to go much more significant below these lows, so we do have liquidity below here. I like the fact that we took the stops out here initially. Okay. So this could be a short in here from 132 big figure. small little void in here. Would have been nice to see it come up here before the numbers, but it could send it through there one more time, hit this level, maybe even expand as far as bearish order block in here. It doesn't have to do that, and preferably it wouldn't. I outlined the CAD trade yesterday during the live session. Okay, we got 2 minutes for the release. Ahead of the numbers, your stop would have to be around 45 to 50 pips on the upside from where we're at now. Again, we're looking for run down to 131.30 to 131.25. And then ultimately you'll run as low as 30.60 to 30.50. Okay, there's our release. Watch this body's candle. I'm sorry, this candle's body right in here. This may be all we need right here for the sell-off. I'm going to take it here right at the bottom of the bearish order block right here. Right there. So low comes in at 132.15. 132.15's the fill. Didn't take profit. Okay. Can everyone see the details on this? not sure if you guys can. You should be able to magnify it. I'm not sure if you're still able to do it. Um, right now the stop's sitting at 32.62 and take profits 31.24. We go out to an hourly chart. And really, I want to be down here. Yeah, I'm not looking at your comments right now, guys. I'm focusing on the market. I can talk more about why I'm doing what I'm doing after I get some feedback on the entry. Okay, so we have liquidity pool below here. I'll take profits at 130.64. That may adjust depending upon what we get in terms of reaction in the market. I'm going to be watching these lows in here. And the stops at 32.62. We have the range still in here that hadn't been filled in from yesterday. Then we have the liquidity pool below here still. So I want to see some expansion on the downside, get some price in between market and my entry. Now, had it had done a return to this level up here and closed in this void, not needing to close in all this, it would have came up here and hit that initially before the numbers, my stop would have been a little bit lower than it is now. But because it has left this in here, I've allowed room for it to still spike up in there after the numbers or during the release of the numbers. I don't want to see it happen, obviously, but if it does, I have myself a little bit of room. If it comes up here and hits that, then I'll have to move to the sidelines. I will not take another re-entry, and I'll wait for New York session. But it has to start moving in here. The longer it sits in here, the less interested I am. Fiber's still stuck in the mud. It's amazing, isn't it, how it just stays in that range? Dollar still looks like it wants to roll higher. I'm not trading the news, I'm trading the expected volatility. I never know what the news is going to say or what they're going to mean by having the numbers coming out. I just look for the volatility that comes around that release. to give you an idea of what I'm looking for. Daily range candle to look something like that. That's what I'm looking for. I'm permitting enough of a room to move back up to that 3241, which is not what I want to see, but I'm allowing it. It's just basically the opening right here, a small move up, and then more of the daily candle down here with a down close. That's all I'm illustrating here. It's not that I'm highlighting any specific price levels, just the overall Power 3 context. I just highlighted the middle of the up candle. Let me zoom in a little bit more. That's the mean threshold of bearish order block, which is the up candle prior to this down move. Again, we have liquidity resting below, just below these lows. Again, we got more news to contend with in New York. Let's go back to it for a second, just for a moment. So we have at 10:30, have the crude oil numbers again, and well, tonight we have something we can do in Australia, but we have one more news impact, dollar-based for New York, late New York. I'm sorry, late New York overlap with London close. it can pierce it. We just don't want to see the body of the candle go through it and close. The comment was, we breached the midpoint of the up candle. It can poke through it, especially in London. There's a lot of movement in London. And again, it would have been much more favorable. And again, we're still studying the idea that we're above the opening at New York. Now, again, this blue line here, sticking true to the format I started with this mentorship when I gave the first video, outlining what we're looking for true day. True day is the daily range parameters. In other words, what the bulk of the volume for posting a high or low of the daily range. They should be occurring between the midnight candle or midnight time frame in New York and 3 p.m. New York time. Okay, so you're seeing the parameters, or kind of like the beginning and ending of what would define the time of what the daily candle really should look like. When we look at our platforms, it's not that clear because you have all of, you have Asian, you have the New Zealand Open and Aussie session, which to me isn't significant. I'm more concerned about the bulk of the volume that occurs from midnight in New York to 3 p.m. That's where 90% of all the money is exchanging. But I really want to see it expand down in here. If we get down below the middle of this down candle, which is what I'm hoping we'll see in here. If we get below the middle of this down candle here, the stop will get lowered. Still have this little bit of a range in here from yesterday's, or not yesterday, what's today? The 14th. We have a couple days ago, we had this low. We didn't come back to that at all. And that was my only concern going in here, and why the stop has to be so high. So far, it's lackluster for high impact. I ain't seeing much volatility here. All right, we got about 12 minutes left of the ICT London Open kill zone. I'd like to see it be able to come down out of that, at least get below the middle of this candle here. That would bode well. The longer it sits in here, the more likely it wants to close in this range and maybe even return back to this bearish order block, which is not what I want to do. What I'm saying is if we don't get a movement below the middle of this candle before 5 a.m. my time in New York, I will look for another opportunity to reposition and collapse where it's at, and just leave the idea for the New York session. Because the longer we sit in here, the more likely it'll want to expand and close in that range, at least to here, which obviously opens up risk. And then we could still end up hitting this bearish order block if it does that, just on pure static price action. Or we're giving it about 10 more minutes to get below this down candle. I like to see when we have news impact releases like this on the economic calendar. We've talked about this since the last. Well, no, it would have been the first week of September we started talking about it. That their impact or injection of volatility around these high impact or medium impact numbers, they should have a lot of movement. There should be a lot of snappiness, real punchy reactions in price. And what that is indicating for us is that it's running for liquidity, or it's initially knocking one side of the market out or putting them in on the wrong side. We have two equal lows in here, relatively clean, and we have these levels down here as well. I like, again, the fact that we've already swept above here. What I don't like is that we didn't come above and hit the bottom of that range that we created a low on. This is the only thing that has me concerned about the trade, that we didn't come back up here pre or post release at 4:30. So that's why we're saying we're going to watch this candle here. We want to see it come down through that. If we get this, as soon as we get down below here, if we get it at all, and there's nothing saying we do, but if we get below here, we should see expansion and try to run to these lows down here. And why I'm primarily focused on the fact that anything above, okay, any Judas swing higher should be sold, is because we've had a consolidation after yesterday's low that was outlined in video, and we still have all of this unfilled range in here. Let me see if I can make this. Actually, it's very cumbersome putting this little box up here. Let me put it back. I cannot see your comments, so if you're asking questions or whatever while we're doing the live session, I try to ignore all that because it's a distraction. It'll take me off my train of thought, and I won't be able to focus. So again, we have a small little bit of this liquidity void that was not closed in yesterday. We went down just this far. We have a little bit more of it, but then we have all these equal lows in here. Even if it comes down to just close in the range in here, we have a little bit of a room for a profit. At the very minimum, reduce the risk. But I like these lows down in here, and it may take it may take tomorrow to get into those levels. But we'll see. First, we got to contend with where we entered. In other words, we had this. This is what I'm outlining. Here's Monday, high of the week so far. Tuesday, sell-off. One more run up initially for Wednesday, and then we should see a continuation to run for the liquidity below these lows. or basically a market maker sell model. Consolidation, expansion, accumulation, reaccumulation, smart money reversal, low risk sell, distribution, redistribution, and it should be washing out, going lower. That's the idea. The problem is we have a really sloppy price swing in here. That opens up a little bit more risk than typical. And we really didn't see much reaction at that high impact news release at 4:30. Okay, I got 6 minutes left of the ICT London kill zone. It has to start marking some daily range for the lower end. Think about what I showed on or described on US CAD yesterday. We have liquidity resting above the highs here and here. It's consolidating. Okay, so we're in a consolidation. Next thing is going to be expansion, and our expectation is it's going to expand and reach for the liquidity up here. It can come down and hit this order block down here. I'd rather it didn't. It'd be better actually if it didn't. Man, I tell you what, anybody trading your dollar the last couple of days have to be going crazy. It's not doing anything. It's not moving anywhere. Got 4 minutes left in the London session. So far, it hasn't moved anywhere. This is trading, folks. I'm so used to having music jamming, and I can't do that while I'm talking to you because you obviously won't hear me. And I'll get lost in my music and won't want to talk. I'll just be thinking. So this is an adjustment for me to actually be talking to you live. But as I think about things, I'm trying to remind myself to think out loud. And again, we're worried about this down candle right here. We want to get through at least the middle of that and try to expand down as we at 5 o'clock. We only got 3 minutes left. And why 5 o'clock in the morning is so significant is it needs to be able to move in our favor for the trade idea. It has to move down. That way, once it's moved down, it can settle and then consolidate during London's lunch and until around 7 o'clock in the morning New York time. Then we will permit a little bit of retracement. We do not want to sit in this and wait for New York, because New York will still have room to expand and then have a market reversal profile, and then it's just too much risk to sit in for that, especially during the doldrum time of 5 a.m. to 7 a.m. New York. So when I'm talking time, it's all relative to New York. For all the news that was slated for 4:30, it's been 29 minutes. No real movement. We're still above the opening at midnight New York. Still some exposed range above us in here in the form of 132.42 and a bearish order block up here. And we still have not broken down through the last down candle. So that has to happen, obviously, to give us a confirmation that we have something that warrants holding. Time and price would have been better for it to have already expanded lower and see the liquidity below, at least down to below the here, and it's not done that yet. And it's 5 a.m. officially right now in New York. Give it one more minute. And what this is, I'm showing is it's a time stop, basically, not just a price stop. So I'm giving the price time to indicate it wants to do what I'm positioned for. I could have stayed in bed today for real. I'm that tired. Okay, so we're almost at the middle of that down candle. We're now at it. Need to get through it. If we do that, we can lower the stop down. Now to move the stop, we're not jamming it down. Okay, we're just going to lower it a little bit. But it has to close below the middle of the down candle in here. And then we're going to be eyeballing whether or not it wants to get below these lows. Preferably if it expands through this, we want to see speed. We want to see speed on the downside. In other words, we want to see it reach aggressively for this low. We don't want to see it just come down here and just hit this order block here, which is the down candle. We don't want to see a response there at all. We don't want to see any slowing down. We don't want a speed bump. Nothing. We want to just gun right through that. I think the Queen's watching me today. you guys get started in trading, you think that by looking at old data and old charts and examples people show for this is where we buy and this is where we sell, you never get the appreciation of the time being in those trades. It's so easy to see past price swings, regardless of what time frame you're in, and you look at them and you're like, okay, man, this is what I want to do. I want to quit my job and I want to do this. And then when you actually get in there and you actually start taking the trades or actually try to uh, implement the things that you're learning, then you're suddenly like, man, this is taking forever. It does. You don't appreciate the time that's necessary for the price moves to pan out. And that was one of the things that drove me crazy as a new trader, because I would see all these supposed price patterns, classic price patterns. Again, I cut my teeth on the market in the commodity market with Ken Roberts, and the only thing he taught was just basically classic chart patterns. All right, so we don't want to see any speed bump in here. We want to get right through this order block, this bearish candle. We want to see no willingness to want to go higher here. We want to go right through it. That's what we're aiming for. Stop is lowered to 32.35. It will remain there until 7:30 New York time, and then we'll adjust if it's necessary then, or if it hasn't already stopped us out. That's still possible. It's not a winning trade, and it's not a riskless trade until it's closed. So what I was saying earlier was that the idea of when you get into a trade and you're new, the time element that's necessary, and you have to submit to that whole process of waiting for price to move around, the uncertainty of it all while you're watching it, it's just nauseating as a new trader, especially because you're already 100 miles an hour. You want to go 0 to 60 in 2 seconds and get to your profit target and then be done for the day. You hit the forums and to Twitter and high-fiving everybody. Yeah, this is great. This is the life. But this is what it's like a lot of times. You're hurrying up and waiting, and it's just, for a new trader, it's very hard, and especially for a mentor, someone that explains this stuff. It's hard to communicate, and it's really hard to overcome that, especially in a live session like this, because about 2/3 of you are all asking me questions as it's happening, and you're worried about the things that are least important. And it's distracting to me because I know what I should be focused primarily on. And I get it. I know what it feels like to be right where you're at. But if you're here, you paid to be here to learn from someone that's been doing it longer than you. So, and I mean this with the utmost respect, when we're in live sessions, this is the time to be quiet. Don't ask questions right now, because I already know what to talk about. I'm already going to know what to refer to while we're talking about the specific price action. And they're the only things that's salient for that particular setup or that particular condition. Everything after or post-trade, that's where we can get into great detail about why this was important, why this wasn't so important. If you're focusing on all the wrong things during the market move, you won't have the focus that's necessary to pick up on when the trade's no longer good. So that's why I ignore you. All right, so we're real close to these lows in here, so we want to see expansion through that and then really run for the low down here. So you're seeing the effects of why we allow a little bit of a breach of the middle of the candle. That's permitted initially. It looks scary. It looks, it gives you all kinds of reasons to get anxious, especially when you're in a trade. You don't want to see that type of thing happen, but you got to get used to seeing it, because it's going to happen a lot in your trades. It's going to come back and recapitalize in the order block, and that's what you see here. And then we've had expansion so far. I would have rather had done this much of a movement before 5 a.m. because now as we're entering London lunch, it may just come down here and take the lows out and then it'll be a pot. Well, we'll see what. Let me just see what it is before we say any more about it. I'm going to take half off at 21 pips and leave the rest with the stop exposed as it is. Okay, so this took half the position off. The remaining portion, the stop will stay as it is. And we're going to let price do what it wants to do now. We're properly positioned for a down close for the day. We're really handsomely placed for that. If it comes back up and hits the stop, we don't want to be in the market anyway. Okay. The reason why I took half off there is because, number one, we've had lethargic price action so far this morning. We have not shown any strong willingness to move lower or higher on the heels of a high-impact news event. It's good to get paid something for our time. It's not necessary. It's not something you force all the time. But given the conditions this morning, I felt it was warranted to take at least half off. So now the risk is extremely light in terms of what we're exposed to. It's only $100 risk in here, so basically it's not much in terms of risk. I think we're probably even. If I'm not mistaken, I think it's even. Yeah, actually, if we get stopped, we'll actually be up 1 pip for the day. So I'm okay with that. So I'm going to close this one here and give you all opportunity to worry about the rest of the day and baptize you in anxiety. And we'll see what we get going into New York session. Again, we don't want to see it do these types of things. That's the reason why we took half the profit off. It should have expanded and ran through aggressively for these stops at the minimum and overcome this down candle, which is a bullish order block. So because it didn't do that, that's the reason why I took 20 pips off where I did. In a perfect world, in a better condition, and we had all the indications this morning to outline what would be an explosive move to run lower. We didn't get it. We didn't see it. So the reason why I took the half off here is because these equal lows, we could have came down now to clear those out and then expand to the upside and then hit this order block, or even go even higher and I would be completely wrong on the day. It's not about being right. It's about being profitable or preserving your equity. So that's what we exercised here this morning. The position is still held. Stop still at 32.35. Profit objectives still down at 130.64 if we get expansion. Doesn't look like it's going to be happening so much right now, but we'll see. Anything can happen now. But we're in the London lunch time period. We're getting ready to go into a quiet portion of the morning. And I'm going to try to get some sleep, folks. So I will check back in here around 7 a.m. Just check me on Twitter. Anything that I see or any updates with this open position, we'll manage that through Twitter. Let me capture all your questions that you've asked on the log. And then I will bid you adieu.